Imagine waking up one morning and discovering that trillions of dollars have vanished overnight. Not because of a war, not because of a natural disaster, but because millions of people believed a machine could do almost everything. Right now, companies are spending money faster than ever before. Investors are chasing anything with the letters AI attached to it, and ordinary people are wondering if they are witnessing the greatest technological revolution in history or the biggest financial bubble the world has ever seen. The frightening part is that almost nobody agrees on which one it is. And the deeper you look, the stranger the story becomes. Only a few years ago, artificial intelligence sounded like something from science fiction. It lived inside research labs, university classrooms, and futuristic movies where robots either saved humanity or destroyed it. Most businesses barely cared. Investors were interested but not obsessed. AI was considered exciting yet distant. It promised a future that always seemed just around the corner but never quite arrived. Then, almost overnight, everything changed. A few astonishing breakthroughs showed the public that computers could suddenly write essays, create art, answer questions, generate videos, and even help write software. The impossible became normal in a matter of months. But the real story wasn't happening on computer screens. It was happening on Wall Street, where fear and greed began colliding in ways nobody expected. Money started flowing into AI companies at a speed that shocked even experienced investors. Venture capital firms rushed to fund startups that barely had products. Billion-dollar valuations appeared almost overnight. Every conference became an AI conference. Every CEO suddenly claimed artificial intelligence was the future of their business. It didn't matter whether they sold software, shoes, insurance, or farming equipment. If they mentioned AI during an earnings call, investors often rewarded them with higher stock prices. It felt as if one magical word had become the key to unlimited wealth. But behind the celebration, a dangerous question quietly grew louder. Were investors buying real businesses or simply buying hope? History has seen this kind of excitement before. In the late 1990s, the internet changed the world forever. But before it transformed our lives, it created one of the greatest market manias in history. Companies with little revenue became worth billions. Investors believed traditional business rules no longer mattered. Everyone wanted to get rich before everyone else. Then reality arrived. Stock prices collapsed, fortunes disappeared, dreams turned into regret almost overnight. Yet years later, the internet truly did reshape the world. That strange contradiction still confuses people today. The technology was real, the bubble was real too. And now, many investors are wondering if artificial intelligence is following the exact same path. As excitement spread across global markets, another race quietly began. It wasn't just software companies competing anymore, it was entire nations. Governments realized that whoever dominated AI could influence military power, economic growth, healthcare, education, manufacturing, and almost every industry imaginable. Suddenly, AI wasn't simply about chatbots or image generators, it became a geopolitical weapon. Companies raced to hire the world's smartest engineers. Salaries exploded. Computing power became one of the most valuable resources on Earth. Massive data centers appeared everywhere. Billions turned into hundreds of billions. But almost nobody stopped to ask whether all this spending would actually produce enough profits to justify the enormous cost. The competition became so intense that businesses feared being left behind more than they feared making bad investments. Boardrooms echoed with one terrifying phrase: What if our competitors adopt AI first? That fear changed everything. Executives approved billion-dollar budgets. Investors demanded AI strategies. Employees rushed to learn new skills before becoming obsolete. Startups promised revolutionary products before building them. Suddenly, the market rewarded confidence more than evidence. And when confidence becomes more valuable than reality, financial history suggests something dangerous may already be unfolding. One company after another announced enormous AI investments. Chip manufacturers struggled to meet demand. Cloud providers expanded infrastructure faster than ever before. Tech giants competed to build larger, smarter, faster models. Every earnings report became a test of whether a company was spending enough on AI. Ironically, investors often cheered bigger expenses instead of questioning them. Normally, businesses are rewarded for making profits. Now, they were being rewarded for promising future dominance. It sounded exciting. It also sounded strangely familiar. Then something remarkable happened. Companies that had never discussed artificial intelligence suddenly rebranded themselves around it. Marketing departments rewrote presentations. Websites added AI everywhere. Product names changed. Old software suddenly became AI powered. Some businesses genuinely improved their products, others simply changed the language. Investors often struggle to tell the difference. Stock prices jumped anyway. The market seemed less interested in what companies had actually built and more interested in what they claimed they might build someday. But the real problem was just beginning. Deep inside the financial system, expectations became almost impossible to satisfy. Investors weren't hoping for growth anymore. They were expecting miracles. They believed AI would eliminate costs, replace workers, multiply productivity, and create endless profits all at once. Companies faced enormous pressure to deliver impossible results. Every quarterly report became a battle against unrealistic expectations. Even excellent performance sometimes disappointed investors because expectations had become disconnected from reality. And when expectations become larger than reality, markets often respond with brutal force. Behind every powerful AI model stood an invisible mountain of expenses. Training advanced systems required enormous computing power. Specialized chips cost fortunes. Data centers consumed staggering amounts of electricity. Engineers earned extraordinary salaries. Research costs continued climbing. Many companies generated impressive demonstrations but struggled to build sustainable businesses. The technology amazed everyone. The economics remained uncertain. Investors celebrated dazzling capabilities while quietly ignoring uncomfortable financial questions. What happened next surprised even industry insiders. Revenue wasn't growing as quickly as spending. Some businesses discovered that customers loved experimenting with AI but hesitated to pay premium prices. Others found that building useful products required much more than powerful models. Reliability, privacy, security, legal compliance, and customer support added new layers of complexity. Creating an impressive demo turned out to be much easier than building a profitable company. Yet the market continued behaving as if every obstacle had already been solved. Confidence kept rising, so did valuations. Then came another unexpected twist. Competition exploded. New AI models appeared almost every week. Open source communities created increasingly powerful alternatives. What looked like an unbeatable advantage one month often disappeared the next. Companies spent billions trying to stay ahead, only to discover competitors catching up faster than expected. Investors realized that technological leadership might not last as long as they had imagined. Suddenly, maintaining an advantage became just as difficult as achieving one. At the same time, regulators around the world began paying closer attention. Questions about copyright, misinformation, bias, cybersecurity, and privacy refused to disappear. Governments debated new rules, courts examined lawsuits, businesses worried about future restrictions. Innovation had moved faster than regulation, but history suggested regulators eventually catch up. Nobody knew exactly how future laws would shape the AI industry. That uncertainty quietly added another layer of risk beneath the market's extraordinary optimism. Meanwhile, ordinary workers found themselves caught in the middle of a growing emotional conflict. Some saw AI as a tool that could make them more productive than ever before. Others feared replacement. Designers, writers, programmers, customer support agents, marketers, analysts, everyone wondered whether their profession would look the same 5 years from now. Fear spread almost as quickly as excitement. Businesses promised efficiency, employees worried about survival, investors celebrated productivity gains, families wondered what those gains might actually mean. The media only intensified the drama. Headlines declared that AI would replace millions of jobs. Others insisted it would create millions more. Every breakthrough triggered waves of excitement. Every setback sparked predictions of disaster. Public opinion swung wildly between euphoria and panic. People stopped asking balanced questions. They chose sides instead. AI became either humanity's greatest invention or its greatest threat. Very few paused to recognize that reality is usually far more complicated. Then there was the biggest assumption of all. Many investors believed only a handful of companies would dominate artificial intelligence forever. They poured enormous amounts of money into those perceived winners. Their stock prices climbed to extraordinary levels. Expectations became almost impossible to satisfy. The higher those prices climbed, the less room remained for disappointment. A single weak earnings report, a delayed product launch, a cheaper competitor, any small crack could trigger massive reactions. This single assumption changed everything. Markets have a strange habit of confusing great companies with great investments. Sometimes the world's best businesses become terrible investments simply because investors pay too much for them. A company can revolutionize the world while its stock performs poorly for years if expectations become unrealistic. That lesson has repeated throughout financial history. Yet every generation believes this time is different. The excitement surrounding AI has revived that timeless mistake in spectacular fashion. Imagine standing inside a stadium where everyone suddenly runs toward the same exit. At first, the movement feels exciting, then it becomes crowded. Soon, people aren't moving because they made careful decisions. They're moving because everyone else is moving. Financial markets often behave the same way. Momentum attracts more momentum. Rising prices attract new buyers. New buyers push prices even higher. Eventually, many participants stop asking what something is worth. They only ask whether it will keep going up. That's when risk quietly reaches its highest point. Some experienced investors have started whispering uncomfortable questions. What happens if AI adoption grows more slowly than expected? What happens if customers refuse expensive subscriptions? What happens if infrastructure spending never generates sufficient returns? What happens if profits take 10 years instead of 2? None of those outcomes would mean artificial intelligence failed, but they could dramatically change what investors are willing to pay today. And markets often react long before the broader economy notices. The irony is almost impossible to ignore. Artificial intelligence may genuinely transform civilization while still creating enormous financial losses for investors who overpaid during the hype. Those two ideas can both be true at the same time. History has already shown us exactly how that can happen. Railroads changed transportation, cars changed mobility, electricity changed industry, the internet changed communication. Every one of those revolutions created extraordinary winners and devastating bubbles. Technology and speculation have always traveled together. Perhaps the greatest danger isn't artificial intelligence itself, it's human psychology. We become convinced that extraordinary innovations automatically justify extraordinary prices. We mistake possibility for certainty. We confuse confidence with evidence. Fear of missing out becomes stronger than careful analysis. Investors who once demanded solid financial statements suddenly accept vague promises about the future. Greed disguises itself as vision. Optimism slowly transforms into blind faith. Yet there is another side to this story that many people overlook. Every major technological revolution eventually produces companies that reshape the world. Some of today's AI leaders may become even larger tomorrow. New industries may emerge that we cannot yet imagine. Medical breakthroughs, scientific discoveries, personalized education, autonomous systems, and productivity gains could redefine modern civilization. The opportunity is enormous. That possibility keeps investors hopeful despite every warning sign. But nobody could have predicted how difficult separating future winners from future disappointments would become. Eventually, every market reaches a moment when dreams collide with financial reality. Sometimes that moment arrives quietly through years of disappointing returns. Sometimes it arrives violently through sudden crashes. Nobody rings a bell beforehand. Nobody sends a warning message. Investors only recognize the turning point after it has already happened. That uncertainty is what makes bubbles so dangerous. They continue appearing rational until suddenly they don't. Years from now, historians may describe this era as the beginning of a new technological age, or they may describe it as one of history's greatest investment manias. Perhaps they'll call it both. The technology can succeed while countless investments fail. Companies can change the world while shareholders still lose money. Progress and speculation are not enemies, they often arrive holding hands. The smartest investors aren't asking whether artificial intelligence is real anymore. That question has already been answered. They're asking something much harder. Which businesses will create lasting value? Which valuations already assume perfection? Which promises can actually survive reality? Those questions rarely generate exciting headlines, but they often determine who builds lasting wealth and who becomes another cautionary tale. The biggest fortunes in history have rarely been built by chasing excitement. They were built by understanding the difference between a revolutionary invention and a revolutionary investment. Those are not the same thing. Markets reward patience far more often than panic. They reward discipline far more often than hype. Every bubble convinces people that old rules no longer apply. Every bubble eventually reminds them why those rules existed in the first place. Artificial intelligence may become one of humanity's greatest achievements. It may transform businesses, medicine, education, science, and everyday life beyond anything we can currently imagine. But if history teaches us anything, it is this: the most dangerous words in investing are never artificial intelligence. They are, "this time is different."